Hey everybody out there in YouTube land, it's Kemosabe giving you an update on price action to see what I see here. Here on the monthly chart, we're going to build this chart out from the high time frame all the way down to the low time frame. We have the trend that is in the uptrend. So you have your high, your latest high. You see how much higher it closed than this high, and we expect the low to come in roughly the same distance from there. So your higher low comes in that much. See if I can explain this better maybe on a weekly for the trade setup that I'm seeing. But we'll zoom into current price action, similar to how we did with the last monthly candle, how we measured this wick and got the 50% retrace of it. That's how we were able to get this buy setup, which I wanted around 53.5. It ended up going to 52.5. Hey, it's all good. So let's take a Fibonacci measurement of just that wick, and we'll mark off the 50% mark with a horizontal ray right about there. At 55,613. That doesn't look too bad in that portion of the wick. We also do have wicks to the upside. Those might be filled eventually. 67,685. That's an area of interest. But yeah, let's zoom into the weekly and see what the weekly closure that we recently had. So here on the weekly chart, as everybody can see, we did close a higher high. That is the first time we had that in this downtrend. We have a possibility of a change in behavior. It's not above this swing high, but in this vicinity, this is a change in behavior after getting a series of lower lows and lower highs. This is a potential higher high to change the trend. So if we're just trading trend, we can see how much taller or how much higher the week closed. And it closed 2.24%. So then we'll take that and bring it down to the previous close. And this is the area that I would expect to hold a higher low on a weekly. And lo and behold, that gets you basically 50% into that monthly wick. But more importantly is this wick over here. I like that wick. That is your previous support. Broke out, come back and retrace. I wonder how much of a retrace that would be of that move up. So we can measure from the bottom of that wick up there. That would be a 702 retrace. Blockchain backer back in the game. He likes the 702. I don't mind it either. Bringing it on down to the daily chart. Let's draw some trend lines from the low and see where our trend is finding support on our demand line. We also do have a higher high close on a daily, but I'm really happy that that got a higher high close on a weekly. That gives a higher probability of moving up out of here and potentially changing the trend. There is a reason why whoever is controlling this market, there's a reason why they closed that weekly at the higher high. They held it up there Saturday, all of Sunday, just to make sure that that weekly candle closed a higher high, and immediately price retraced at the beginning of the week. So that means they just held it up there with bids, kept buying it up, and once they closed the weekly up there, there was no more reason to keep the price up there because they've switched the algorithms to start buying a higher low, which might come in around here. So we'll draw our supply line that broke out. And that all looks good, all converging on the same area. We have that monthly wick fill, 50%. This probably wouldn't get all the way to 50%. We have the area on the weekly where we would expect to find a higher low, and these trend lines converging in that area. Let's do the time cycles from that low to that low projecting. A lot of convergence coming in this area for the 8th of October. Maybe it's around the 7th, maybe it's around the 11th, sometime in that pocket to find a breakout, maybe back test right down there, grab all this liquidity that's down here, and maybe push up from there and finally take out the upper liquidity and see how high she goes. And we'll take current price action, and what we see is a series of higher highs, higher lows on the daily here. Got a higher high, higher than there, higher low, higher high, and now we have a lower low compared to that low. Question is, how much lower? Well, let's measure it from close to close. It's that much lower. So for the sell setup, I would just take this, put it at the upper close, how high it closed, and this is where I would expect supply to come in. This is where your lower high would come in. So you've got your low, your high, your lower low, and maybe this daily candle gets respected, and we just stay inside this daily candle for a bit before breaking down to this area that we're looking for in the 7th to the 11th of October range for the ultimate buy setup. We'll see what kind of patterns we get. In Elliott wave terms, maybe you're currently having some kind of A wave, you get a B wave, and then C leg down to the buy zone, maybe. And your B wave could be, extended out like that. Maybe you get some kind of consolidation box here where price is accumulating, and then you get the final shakeout here. But we can zoom into lower time frames and try to disseminate what it may look like. Currently, all we have is a lower low close on a daily, and the only way to invalidate that is to close a higher high above here. Then maybe your ABC comes like that. So for now, the trend is more likely to turn down. You're at risk of getting a lower high somewhere in this vicinity. Depends on how high they let it come up. You do have a fair value gap all the way up to 65,350 or so from that wick to that wick. So it could play in that range a little bit. Any close above there, and I would try to buy the trend. If you close a higher high, you look for the higher low. I'm going to change that one to red and put it where the lower high should come in, just to differentiate it from the green one down below, which would be the buy setup. Buy setup currently looking like 56,000, 56,200. And I think in the last video I was talking about this daily wick. 50% of it would be 56,377. This is all an area of interest because liquidity was not taken down here. Now we have taken this liquidity, so maybe that's enough and it just rockets up from here. I wouldn't say that's likely until you close a higher high. Then you try to buy the higher low. But let's zoom into lower time frames and see what's up on a 4-hour. All right, 4-hour is in a downtrend locally, and we have a potential support and resistance flip right here. You see how 63,132, it was support multiple times. Support, 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 support. Now you have to see if it turns into resistance. So there's likely a sell setup right there at 63. Stop loss would probably be at 64. So keep a tight stop. And maybe you get another push down into the buy setup. Also, this area right here, 65,400, also was a support all weekend. And then there's also the liquidity that's above there. So there's multiple sell setups as you're going up. As you made a lower low, you expect a lower high somewhere in this vicinity, likely to be 63 if they want to keep the price in this range for accumulation before continuing down. So if I'm expecting a buy setup sometime around this area, and we started a leg that looked like this and then did an ABC. And then the timing and whatnot, I'd expect it somewhere in this timing around the 5th to start moving back down again with another ABC like that, and then accumulate, repeating the distribution pattern, putting it for an accumulation pattern into the cycle low, or the cycle low idea. That's ideally what I'd like to see around my buy setup for a back test of that trend line. There's just a lot of confluence there at 56,300. Also, another number I was looking at was 59, but I see more confluence down below at 56. So we'll see. If for some reason, though, this price just fakes out and comes and closes the day out around 68,000, then that may be, if it closes the day there, that would be a 2-day bullish engulfing candle. And if price holds up here until the end of the week, that might be the weekend short squeeze that I've been referencing for the past probably a couple weeks now, saying that it's likely to happen on an illiquid weekend pump and just make the bears close out their shorts as prices is well above the range. Not to say that it will happen, but it's a scenario that I'm looking at happening, because price keeps getting sold down during the week. So maybe we get a weekend pump and the bears that were shorting all week will have to cover, and that'll be above all-time high, and then you might get some nice pushes up there for the upper targets. But locally here, we're still in a downtrend until this 4-hour actually closes up here. You could have a higher low, but your stop loss would have to be there. If your stop loss gets hit, I would expect this price to go like this into our buy setup. So that would be with a 4-hour close above this high. Then you have the potential for a higher low to come in right there and go up on a 4-hour and maybe close a daily up there. Your stop loss must be there at that wick low, though. Anything below that, and I'm expecting 56. Some people are saying 59, 58. I would say price is going to push towards liquidity, which the next liquidity is down at 56. But we may take a few days to chop around in this area before getting down there. We may chop around for a day or two. But if this price doesn't chop around and just decides to close the daily up there, I'd get very, very bullish, and this is likely a bad trap, and then they're going to short squeeze it. Well, that's all I got, I guess. Leave your questions, comments in the comment section. Like and subscribe. Share the video with other people in your groups. Let me know what you guys think. Have a good night. Keep your stops tight.